Hi guys, Cameron Walker here, your favorite Huntsville realtor, and today we're going to talk about the shift in the Huntsville housing market. If you've been following national news about the housing and real estate markets, then you're seeing some headlines with questions like, has real estate peaked, are we in a bubble, or is there a crash coming soon? Well, today I'm going to cut through all the hyperbole, all the clickbait titles, and I'm going to give you the real skinny on what's happening in the Huntsville real estate market. That way you can make an informed decision when it's your time to buy a home. The short of it is there has been a shift in the Huntsville housing market. Over the last couple of months, we've seen an increase in inventory, a slight decrease in buyer demand, homes are staying on the market a little bit longer, and there's been a big slowdown in the rapid price increases that we've seen over the last couple of years. Huntsville's housing market, just like all others, is driven by supply and demand. So we're going to start off by looking at the supply side. In July of 2022, there were 470 existing single-family homes on the market in Madison County. This is the area that surrounds Huntsville and the surrounding suburbs. That's about a 30% increase from the year before, but significantly lower than the pre-pandemic norms. This really stands to reason when you look at the interest rates over that time period. In the middle of the pandemic, rates really bottomed out. That brought a lot of buyers into the market, and they bought up the existing inventory. Then in January of this year, rates started to increase, and as they did so, fewer and fewer buyers entered the market. This led to an opportunity for supply to rebound and brings us to where we are today. We also need to look at buyer demand as it relates to supply. The way we measure this is the months of inventory on the market. We look at how many homes are available for sale, and we look at how much buyer demand there is, and how long it would take buyers to exhaust that supply of homes if no new homes came on the market. Now, we know there'll be new homes on the market tomorrow and days following, but we also know new buyers will enter and exit the market too. But if we take a snapshot today, we can track this over time and get a sense of where the market's headed. And as you can see, there was a 30% increase here. And there's about 30-day supply of homes. That puts us pretty strongly in a seller's market still. Not as bad as we were last year, and we're trending towards a more normalized market. A more normal or balanced market is when there's 5 to 7 months of available inventory. That means neither the buyer nor the seller have an advantage when it comes to bargaining power and negotiations. Right now, the market still favors the seller. With supply being up and demand being slightly down, we would expect homes to stay on the market a little bit longer. And that's playing out slightly. We've seen a very marginal increase to the average days on market being 10. However, 50% of homes still sell in 4 days or less. That's not a lot of time for home buyers to make a decision. So the way we mitigate this is I tell my clients, let's narrow down the area first. That way we can focus on the house and we don't have to backtrack and see what the commute or the school district's going to be and if that's a good fit. And that way we can expedite the decision making when we focus solely on the house. All right, with the increase in supply, decrease in demand, and we're keeping a pretty steady speed in the market, what's that doing for prices? I'm happy to report we have seen a slowdown in the rapid increase in prices over time. Over the last 3 years, prices in Madison County have increased by 65%. But if you look here in the last couple of months, that's really moderated and pretty much flatlined. Now, some of this is seasonal adjustment. We're getting into the school year, and there's just not as many people in the market looking to purchase a home. But a lot of this is driven by the increase in interest rate. It's decreased people's purchasing power, which means they're not bidding as high on homes. They're taking more time to make a decision. I would expect to see this trend continue. I think we're going to see up and down movement, low single-digit percentages over the next 5 to 6 months. As we get through the holiday season and into January or February, I think we're going to pick back up in the spring. All right, this should give you a good idea of what to expect going through the end of the year in the Huntsville housing market. If you have any questions or want to get out and see a home, you can drop a comment below, or my contact information is always in the description. Thanks for watching.